So for the people who aren't familiar with how to differentiate between the different stages, basically, how do you do it? How do you determine whether a stock's in a stage two versus a stage four?
Well, it's just the price action in relation to the moving average. So in stage one, the price action you can see here is going up and down around a flattening moving average. Then once it breaks out above the moving average and the moving average starts sloping up, then you have a stage two uptrend. And then again, like the stage three top, the price action starts going up and down around the flattening moving average. And then finally into stage four, it breaks down below the declining moving average. So it's like the price action in relation to the moving average.
For sure. And it's interesting because the class I took at the University of Maryland, this was one of the first concepts that my professor taught us, which I'm very grateful for. Always focus on stocks in the stage two uptrend. That's when the big moves are created. And likewise, on the flip side, the stage four declines, those are when the big losses happen. And if you go back and study all the previous greatest winners of all time, you can see that they have significant runs during stage two when they're above a rising 30-week. And then all of them pretty much do experience a stage four decline at some point. We saw, even looking back at Amazon, Apple, they all had stage fours, where if you know the system and know the longer term trend, you can protect yourself during those downside progress and basically get back in once we have another stage two uptrend starting. So I think it's a really powerful concept. And I think you can use it whatever your time frame is. If you're an investor, I think you'll go into later on the kind of buy points for different investors versus traders. But traders in general, you want to be focusing on stage two uptrends. That's when the big moves are created. And stage three is when there's a lot of chop back and forth. And investors, you want to get in as close to that stage two, the beginning of the stage two uptrend as you can.
Exactly. Yeah. Like actually, I posted this chart I made on Twitter
Right.
the other day where like, people ask me all the time, like, a stock's in stage two, do I just buy it? Like, no, that you don't just buy any random stock in stage two.
Yeah.
Like Stan Weinstein laid out the ideal buy point, like early in the stage, like the breakout out of stage one into stage two, and gave you like certain criteria like that should be there as well, like volume, like no resistance, like is it in a leading sector, like those factors are extremely important into catching like the best stocks that are breaking out in the market, and you need to buy them right as they're breaking out into stage two. Like that's why he calls it the ideal buy point. So, and then you don't want to be buying in stage three, obviously, because you could be trapping yourself in a top,
Yeah.
obviously not stage four. And then like some people say, can I just buy in stage one? Well, the problem with stage one is you could be waiting for a long time
Yeah.
before it breaks out into stage two. I mean, there's like certain sectors have taken years to bottom out in after a bear market before they go back up into stage two. So you don't want to buy anything in stage one either.
For sure. And this is very similar to Can Slim. We want to be focused on the first and second stage basis. So I know it's kind of confusing stages and with stage analysis and stages with Can Slim, but basically a stage one or two bases are the first two proper consolidations that a stock moves out from. And those occur in the stage two uptrend for sure.
Yeah, I've heard you mention those stages about canceling. Like it is a little bit confusing, but
Yeah,
yeah, the stages are what's the stages are numbered in stage analysis, and that's what they are in this system, I guess. So.
for sure. And do you only use a weekly chart to determine the stages, or do you use kind of a 150-day, 200-day on a daily chart?
Yeah, I when I'm on the daily time frame, I'll change it to a 150-day moving average on my chart. So that's exactly what I do.
So getting into it, I guess this graphic here shows the ideal buy point for the investor. It looks like it's just coming out of the stage one into a stage two. Can you talk about kind of this graphic and how investors should be interpreting the price action as well as the volume?
Yeah, so what this chart is showing is the breakout of out of the stage one base into stage two. You can see how the price action is starting to get above the resistance line here, which is,
Mm-hmm.
which is what I draw exactly on my chart. And then you see the 30-week moving average starting to curl up, signifying it's like starting to move into an uptrend. Notice the increase in volume here. This is a key aspect of a stage two breakout. Like Stan Weinstein says, don't trust any stage two breakout that doesn't have like a huge increase in volume, because that's a sign that institutions are coming into the stock and they're about ready to push the stock higher into an uptrend. And then he lays out the criteria, like how do you buy the stock that's breaking out into stage two? So what you do is you buy like the initial breakout, which is the point A here, and then you try to buy the pullback like point B here to like round out your position. So I use this system for position trading. So I'm trying to like establish my position during this breakout point and then this pullback. And then once, if I can get into my position and the stock keeps moving higher, it kind of breaks free and gets this like release velocity and starts moving higher. Like that's how I basically set up my position trade. So that's how this works. And there's other like important factors on the ideal buy point. Like you want a stock that has no resistance.
Yeah.
Like the bigger the stage one base, the better, because that like signifies that there's probably stronger hands in the stock by the time it got to that point, and there's not going to be as many sellers when it breaks out. And the sector is hugely important. Like if you find a stock in a sector that's really breaking out, where there's a lot of stocks in the same sector moving higher, like that's can really dramatically improve your returns if you find that. So these are all important factors for the ideal buy point.
So in terms of the resistance above, like basically what you're saying is if you look to the left on the chart, there is a decline here. You want to see that to be as small as little as possible. You want the stock to be closer to all-time highs and maybe not much volume on that selling. Is that where you're getting at?
Yeah, and actually it's interesting how he put the resistance here in the chart, because he says in the book like the less resistance the better. So I use 2 years on my chart to determine if a stock has resistance. I know some people will go back further in time to consider like where the resistance really is, but
yeah,
like, and I think he says that in the book too, like 2 years is what we consider resistance. So if you've got a 2-year chart and there's no price action above the breakout price, then there's really no resistance in the stock. Is how I look at it.
For sure. And it's interesting what you said about the longer the stage one, because I was doing a video with Ross Haber for the Trailline channel, and we were looking at Qualcomm, and it had like a very long just sideways move for I think 8 months to a year, and when it broke through that finally and started a stage 2 uptrend, that's when it really got going, and that was a really impressive run with Qualcomm. So I completely agree with the longer term base, the more powerful the potential move from it.
Yeah, I mean, here's a Tesla in 2019 broke out of like a 6-year base. Like it was incredible. Like that breakout, like that's a great example of a long base that seems like it's never going to end. So
for sure. So this is the ideal buy point for investors. How should traders use this strategy?
So yeah, he talks about, and like in his terminology, investor versus trader. Investor just means a little bit longer of a time frame, like up to like a year. You might be trying to hold, whereas a trader, you'd be like looking for like a few weeks to a few month move. But in reality, you can use either like I use both of these patterns to look for my breakouts, but this is a breakout within an existing stage 2 uptrend where the stock is previously in an uptrend here in the price action. The price action starts going sideways and consolidating. A lot of times you want to see like really tight action once you get down to like the moving average here. Then all of a sudden it breaks out again, signifying like they call it a stage 2 continuation breakout. It's continuing into stage 2 and going to continue its uptrend. We can notice the increase in volume here. So all the factors of a investor breakout apply here as well, like no resistance, sector, stuff like that. But this is just a stock that's in an existing uptrend. Typically, I like to buy like the first stage 2 continuation breakout in a stock. Like if you get the further you get along, like, and this would be like the stage bases in CanSim, like they're more prone to failure, right? So yeah, the first
more
continuation,
obvious.
exactly, yeah. So the first continuation is a good place to buy as well.
Yeah, for sure. So, and like you said, I as well look for volatility contraction along the base. You want to see the volume dry up in the right spots and then explosive volume of that breakout as much as you can. So yeah, this is pretty much exactly what I look for: stage 2 uptrend and then a shorter term base within that stage 2 uptrend.